Hi viewers, I am Bhavani. In this video, I am doing about golden rules of accounting and journal entries. These two are more important for accountancy friends, and journal entries are the primary book of accountancy, and whole accountancy will be depend on golden rules of accounting. So these rules are the foundation of accounting. This is the first we have to remember. These rules are the foundation of accounting. In accounting, there are three accounts. Those are personal account, real account, and nominal account. Personal account explains about persons, real account explains about assets, and in nominal account, expenses, losses, incomes, and gains are included. So firstly, we'll know about personal account. Here we know that personal account explains about persons, that is, debit the receiver means who received the cash or check from bank or from person is known as receiver, means I am giving cash to you. So for example, I am giving the 10,000 cash for you. So you will become the receiver, means debit. I will become the giver as a credit. I think you understand this example, friends. So real account is nothing but assets. So we purchase many assets like furniture, cash, building or machinery. These are all included as assets, friends. So when they enter into a business is known as debit, and when we sold those assets for cash is known as credit. When they goes out, it becomes a credit account. And nominal account, as per nominal account, all debit all expenses and debit all expenses and losses, credit all incomes and gains. So if we incur many expenses in our businesses like wages, salaries, rent or some etc expenses, those are all included as debit. And incomes, we incur many incomes and gains, those are all included in credit side of the nominal account. So friends, I think you understand the golden rules of accounting, and if you have any doubts about this, you can post in comment box. I will clarify your doubts. So coming to journal entries. So I told firstly only, friends, journal entries are important, and those are the primary book of accountancy. The whole accountancy starts with journal entries. So this is the format of journal entries, friends. Date, particular, LF, debit and credit. Actually, I forgotten to say the definition of journal entries, friends. Firstly, we have to know about what is journal. Journal is nothing but a book. A journal is book. Journal book. The journal is nothing but a book which business transactions are recorded in chronological order as when they occur. Simple, friends. Journal is a book. The business transactions are recorded in chronological order and when they occur. Just in 2 lines. So we'll see some statements and examples of journal entries, friends. Shiva commenced business with 75,000. Here Shiva is nothing but owner, investor at capital. He has started his business with 75,000. So how we have to write this entry means, firstly we have to enter the date, cash account data to capital account. Here cash account is nothing but business account, means business is receiving the amount 75,000 and capital is giving capital for business account. So his creditor, his business is data. So first cash account data 75,000 to capital account 75,000. It is a ledger folio. LF means ledger folio. Don't confuse about this. So we have to write narration also, friends. Narration is also very important. Being the business started, and narration should not cross 2 lines, friends. Only we have to write in only 2 lines. So don't forget this point. And coming to second one, sale of goods for cash. So friends, this entry is very easy. We have to remember sales means income, purchases means expenses. So for example, if we sell any product, we'll sell newspaper, friends. When we sell the newspaper to the shop owner, he will give the money, means we are receiving the income or cash. So like that only, friends. So cash is debiting, means we are getting the cash. So we have to write cash account data to goods account, means goods are going outside, cash is coming to us. So simple, cash account data to goods account. Second one, 10,000, 10,000, which the amount has given, we have to enter like that. So as per third one, wages paid. Here wages means expenses. Expenses is also known as salaries or all some expenses we incur in business. So wages paid, what is the cost of wages means 5,000. So we have paid 5,000 expenses. So wages account, we have to enter the date when the wages has paid. So wages account debiting to cash account. Cash is crediting, sorry, cash is expense, wages are expenses, no friends. So being the wages paid means we are giving the cash for wages account. So third one, 5,000, 5,000. So these are all the examples of journal entries. So I will show you more examples. So as per fourth entry, cash paid to Rahim on April 10th. So for this entry we have to write as particular date, particular ledger folio, debit amount, credit amount. Those are all same entries, friends. So April 10th, Rahim account means Rahim, this is account, which account? This is personal account. So here he is mentioning about person. Rahim is a person. So Rahim is receiving the cash. So he is a debtor and we are giving the cash for Rahim. So we are creditor. So the narration of this is being the cash paid to Rahim. Simple, friends. Who receive the cash, he will be the debitor. Who give the cash, he becomes a creditor. Fourth one, 5,000, 5,000. Rahim account 5,000 debit side. Cash account 5,000 credit side. And as per fifth entry, sales paid. Sales. So sales is nothing but income. When we sold the goods, we'll get sales. So salaries. So our difference is not the sales, it is salaries. I wrote mistake. So as per fifth entry, salaries account data to cash account. So when we have seen here, wages paid means wages account is becoming debit, cash account is crediting. So we have paid salaries, those are expenses as per normal account. All expenses and losses are debit, all incomes and gains are credit. So salaries account, fifth one, 6,000, 6,000. For entry being the salaries has paid. So as per sixth entry, sold furniture for cash means we have sold the furniture. As per real account, assets means the debit what comes in and credit what goes out. So cash account is debiting means we sold no furniture, we are getting the income, we are getting the cash, so it becomes debit. Furniture going out, so it becoming credit. So narration is being the sold furniture or being the furniture has a sold. You can write any narration, friends. Amount. So as per seventh entry, cash deposited into the bank. This is very important, friends. Don't forget this point. This is more. There are two types of deposits. I will explain you later. So April 17th date we have to write as this. So bank account means here we are depositing our cash into the bank. So bank is receiving our cash, that becomes debit. We are giving the cash, it becomes credit. Being the cash deposit into bank, just simple. But it is very easy and we have to understand the point. We should not confuse in that. Bank account debit, cash account credit. So when we withdraw that amount, cash account debit, bank account credit. Simple. 6,000 bank account debit side and 6,000 cash account credit side. So as per 8th entry, received rent. So what we are receiving here, rent is receiving, is rent amount is receiving. So we have to write cash account. Cash account is debiting and rent account is crediting. So cash account 10,000, rent account 10,000 as per debit and credit. So narration being the rent has received. So ninth entry, I told you here bank account is debiting, means we have deposited cash into the bank, but here we are withdrawing that cash for our personal use. So this withdrawn is two types, friends. One is personal use and for office use. When we incur withdrawn for cash is for personal use, we have to write as drawing accounts. And when we withdraw cash for office use, just we have to write as cash account. So April 21st 2015, drawings account means we are withdrawing cash, no friends, that becomes debit. Our account will become debit and bank account will be credit. Bank is giving means bank is a creditor. So being the cash withdrawn for personal use as per 9th ledger folio and 5,000. So as per 10th one, as per purchase of goods, in second entry we sell the goods for 10,000 and again on the 10th entry we are purchasing goods for 4,000. So 4,000. So purchase is nothing but expenses. As per nominal account, expenses and losses are debit and incomes or gains are credit. So purchase account is debiting, cash account is crediting. So being the goods purchased 4,000. So friends, this is the journal entries and the rules of accounting. I think you understand this. If I committed any mistakes, please forgive me, friends. Thank you, friends. So please don't forget to subscribe to my channel